Hello, this is Dave, and welcome to Equity Story. Just having a quick look at here at the ASX 200, and we held up really well. We had a good move last week, so we are holding up this week up really well. And I think obviously just waiting to see what the Wall Street's got in store for us for the rest of the week, and I think it's going to be quite bullish. And the reason I'm saying this is we haven't got any what we call sort of interaction with past days, which is a sign that the market might sort of sell off a little bit. I mean, what you'd be expecting now is, and often you can see in charts, I'll give you a little secret here, it'll come back and when you got a nice sort of bullish move like this, it'll come back and it'll play around the sort of levels it was 3 days ago. And that's often a sign that the the sellers are coming in. But this looks extremely bullish, and I think it's got that 20,000 target in its sights. Possibly it just wants to do that before it does cool off a little bit. However, we're playing the game. The market's going up, so we put on two good stocks today. NAB's one of those. It's an excellent little trending stock, and it's looking very, very good. Again, we like it. Had that little breakout last week, and I think realistically, you'd say it's got that sort of. You think that $32 level would be a target, and we put on a little RFG as well. So the charts are playing up a little bit, but again, it looks very, very, very good. Bapcor held up really well. I think that obviously the story of the day was Domino's had a big jump up at one stage, about sort of 5-6%, and you gotta love them. UBS came up and said something really positive about the stock and singing the praises of Domino's, believing it's very good value, obviously for the history of the company, and when you look at the history, you can just see how this company performs year in year out and outperforms expectations, and hopefully it's going to keep on doing that because we're certainly trending this at the moment. We've got that $80 target price. On a sour note today, Bellamy's came out with a trading halt. I mean, Bellamy's really is quite a disgusting, in some ways. I'm sort of angry with the company, and I don't often get angry with, I'm a pretty laid back sort of guy, but Bellamy's, we had people at the UBS conference about a month ago. They had all the opportunity then to imply that their earnings and are slowing down. They didn't do it, which is absolutely unheard of. So they are sort of a bit of the company need a big kick up the arse for the way they're sort of releasing information, and I think that's what's happened behind the scenes. So it'd be interesting to see what they're going to mention in the trading halt. I think long term with Bellamy's we are sort of believers, but obviously I've got a feeling this share price is going to be hit a little bit more. But you know what? This could be a really good buying opportunity one day. We just got to try and pick it at the right time. What I'd like to talk about, good to see some of the sort of 10 baggers where at the moment the microcap market has been, I think, generally very, very quiet this year across the board. And occasionally you get stocks that do well and I think the stocks that do well, things like, this thing I'd say stocks a little bit like Fastbricks and maybe Megastar. I mean, companies that are very simple to understand, and I think mums and dads can just dig the story. Certainly with Equity Story, we're interested in companies like that. They're interesting companies as well, but also we're interested in revenue. And I think at the moment the mums and dads are following stories a little bit more than revenue. But I think that'll change, and I think you can see these really exciting stories that we've got on, like Star Group today. What an amazing announcement Star Group put out. I mean, we're just laughing here at Equity Story about Star Group. How can a company just keep putting out earnings growth like they do and updated earnings and the stock price? I mean, it was up 6%, but really it sort of goes up 6%. Next day it's down 6%. It hardly moves. It's just absolutely ridiculous. And Locality Planning, just great stories, growing their earnings and really good 10 baggers. Over time, they're going to win. As long as companies are growing their revenue, growing their earnings over time, they're going to win. But again, just at the moment, the market doesn't want to know them. Another company as well, like MIGME. We do like the sort of the story behind MIGME, but again, again, it's sort of a funny announcement that came out the other day. It scared the market. One of the directors resigned. He's part of he's involved with obviously one of the big investors into the company. I think that scares the market a little bit. I have been trying to speak to Stephen Goh to find out more about it. He hasn't returned my call yet. He's a very good guy, normally does. So I am expecting him to call me back in the next few days. So as soon as I hear something about MigMe, I'll report it to you and let you know exactly what the story is there. But again, MigMe, it is growing its revenue, and I think if it can get cash flow positive next year, then we're certainly believers in the story. What I would like to also mention, I've got it here, that the recent story we put on as a 3-year growth. I think that Kinsa Securities. Again, it's pretty hard to find a stock. This company grew its earnings from 6-7 million to 39 million Kina, or whatever it is, Papua New Guinea dollars. It looks really bullish. I don't think you often find a stock giving a sort of dividend of 9% with earnings growth. Now they've implied there's going to be growth this year. They haven't exactly said how much growth, but with a P of 8, I think this is a really interesting story, and it's certainly a really interesting add-on to our 3-year growth story. What I would like to have a little chat about tonight is just get up. We put quite an interesting announcement out on Einstein's trending blog, and it's basically it's about P ratios, and so I'll just bring the blog up here. There you go. I'll bring it across. By the way, before I get to this, on these sort of weekly buy and sell signals that we put out on Einstein's trending blog every week, you can click on these graphs and you can make them much better so they're easier to see. But there's an interesting sort of article we put out, and it says here stocks have only been this expensive during the crash of 29, the tech bubble, and the financial crisis. And this is obviously P ratios. They're sort of slightly adjusted. It's a Shiller P price to earnings ratio, and it's got a few cyclical factors such as inflation sort of costed into the results. But here basically you can see here's 1929 where we had the big crash. Here was obviously 2000, which is a big tech boom. Here was recently this little level here, and again the big crash. And here we are in the world of, it's actually absolutely fascinating times what we live in, because here we are in the biggest sort of debt crisis in the world, again hitting record high P ratios, and we look with this Trump run and millions of dollars leaving the bond market. By default, we look like we could possibly go and retest these highs, maybe as high as maybe 30 or 34. But you know what, when you look at this, and I did history at university, and one thing that history teaches you and trending is it's all about things repeating themselves, and we really do look very similar to this sort of type of setup. And possibly I think what we're going to try and do, Equity Story, is run these trends and run this momentum as far as we can, and obviously be pretty wary when this market does fall, whether it's at the end of this year or halfway through this year. And I think a lot depends on just how quickly we run up. But if history does repeat itself, obviously it looks like we could have a decent pullback sometime in the next year or year and a half. So this is why if you got the bear, and we trended the bear in the BBUS quite a few times. They're basically hedges to the downside. Now, at the moment we're not doing well in them, but hold them. And what we're going to do, if this market keeps going up, we just might add a little bit more. We're going to make money on those trades, and we're going to collect on them when the market falls. But at the moment, we just got to, these are extraordinary times we're trading in. That's why we're holding our gold. We're holding the BBUS and the bear. I don't know how far this is going to go. This could run up. We could go up to 23,000, 24,000 on the Dow. It's definitely going to have a run up. It looks really, really bullish out there. But we have got some serious issues around the world. We've got Europe collapsing. We've got debt issues. And we've got sort of ultra high, possibly sometime in the middle of next year, very high P ratios. And you've got to have some hedge in your portfolio at the moment. Um, that's all I got to talk about tonight on Equity Story. Um, we got some ideas actually, a few 10 baggers. I know I keep saying that was one so we're looking at the moment. It looks quite interesting. So hopefully we'll get one on, and it'll have a nice move. Anyway, I look forward to bringing you this report tomorrow. Good night.